Welcome back to the Explainer. So think about this. Most retail traders are out there burning hundreds of hours hunting for that one magical indicator, right? Yet 90% still fail. It's wild. Today, we're diving into an absolute masterclass on trading psychology to uncover the one real differentiator, the thing that separates the pros from literally everyone else. We're going to break down why true, high-level trading execution actually happens before the market even opens. So if you've ever felt like you're just getting completely pushed around by market volatility, well, stick around because this explainer is going to completely change how you approach your desk. All right, let's just get right into it. Picture two identical traders. They're sitting at the exact same desk setup, staring at the exact same screens, trading the exact same market. But here's the catch. One trader got there way before the session started and has already mapped out a response for literally anything the market might throw at them. The other trader? They just rolled up as the bell rang, basically sitting there, waiting to feel safe, just hoping a setup miraculously announces itself. One is running purely on preparation, the other, they're just running on hope.
Section 1. The Pasteur Principle. Why breakthroughs aren't accidental.
You know that famous quote from Louis Pasteur, the brilliant French chemist behind germ theory? He said, "Chance favors the prepared mind." People love to throw that around as just a nice, inspiring little quote. But honestly, it's a strict set of instructions. Pasteur wasn't talking about getting lucky, not at all. He was pointing out that recognizing a genuine breakthrough requires intense, deliberate work done well in advance. Without that prep, an unprepared mind could look through a microscope, or, in our world, stare at a price chart, see the exact same phenomenon, and absolutely miss it. Recognition strictly requires preparation. So here's the kicker. This prepared mindset isn't what most retail traders assume it is. Being prepared doesn't mean having 6 monitors and 40 indicators crammed onto your screen, looking like you're trying to land a space shuttle. It's not about logging the most screen time, and it's definitely not about who watches the most content. It's simply about answering every relevant question before the open. You shouldn't be frantically hunting for opportunities during the live session. You're just waiting to calmly execute the responses you wrote down hours ago.
Section 2. The Stoic Premeditation. Beyond Pessimism.
Now let's trace this back a bit. There's this ancient Stoic practice called premeditatio, basically premeditating what could arise. It beautifully illustrates that preparing for the worst isn't about anxiety or being a downer. It's actually this incredibly powerful kind of freedom. It lets you rehearse every single condition beforehand. You see, pessimism assumes the worst and just gives up. Premeditatio assumes everything might happen, the good, the bad, the completely unexpected, and produces readiness. Heck, Marcus Aurelius used to sit down every morning and literally write out the difficult people and situations he'd probably face that day. He didn't do it because he was scared. He did it so he'd be bulletproof. Think about how this philosophy hits the bottom line when we look at our two traders. The market, as we all know, does not care about the hopeful trader's wishes. The hopeful trader relies entirely on getting a nice, clean trend. So when a choppy, messy range shows up instead, their psychology just instantly deteriorates. The execution completely falls apart. But the prepared trader, they rehearsed both. When that range hits, there's zero disappointment. It's just scenario B. The market perfectly cooperates with the prepared trader because they've already premeditated the plan. It's a total game changer.
Section 3. The Pre-Session Protocol. The Mechanics of Readiness.
All right, let's funnel this philosophy into cold, hard mechanics. Here is your new non-negotiable 30 to 45-minute daily routine. 5 steps. Context review, key levels, scenarios, parameters, and a psych check-in. You need to treat this exact sequence as your very first trade of the session. Seriously, doing this every single day before your platform even opens will save you hours of expensive, undirected reaction time. Let's break down exactly how we execute this. Starting with steps 1 and 2, context and levels. This is all about grounding yourself in reality. You have to physically write down your market context. Are we in a trend, a range, a transition phase on the higher time frame? Write out one full paragraph. Don't just think it in your head, actually write it down to lock it into your brain. Then, step 2, pinpoint 3 to 5 key levels. We're talking support, resistance, major decision points where the session is highly likely to interact. Mark them up and name them in your journal.
Moving on to step 3. This is where it turns into a concrete game plan. We're mapping out strict if-then mechanics. Keep in mind, you're not predicting, you're defining. For instance, if price reaches level A with confirmation, then scenario 1 triggers and we go long. If it breaks level A without confirmation, that's scenario 2. We observe and hold off. You map this out so you literally never have to guess in the heat of the moment. The session just becomes a basic confirmation exercise. Did the market trigger this scenario or not? Boom, simple.
Then we hit the final steps, 4 and 5, governors and psychology. You absolutely must define your maximum risk and your max number of trades for the day. Set the exact, hard conditions that will end your session early. And finally, write down one sentence that leaves yesterday's emotional residue behind. Whether you're still stinging from a loss or maybe a bit too arrogant from a big win, a calm mind has to lock in these strict parameters before the bell rings. Because trust me, your pressured, mid-trade mind cannot be trusted to negotiate rules on the fly. Doing that is exactly like trying to write a healthy grocery list while you're starving. It's a disaster waiting to happen.
Section 4, the mirror test, your preparation rate.
Okay, time for a bit of a harsh audit of your own habits. I want you to really sit with this question. In your last 10 sessions, how many did you actually begin with a written scenario map and completely pre-committed parameters? I mean, count them honestly. Pull up your journal and look. Because flying by the seat of your pants and relying on hope instead of a pre-written map, reacting on the fly to a volatile market is literally the most expensive thing you can do at your terminal. Whatever that number is for you out of 10, that is your preparation rate. And here's the biggest takeaway from all of this. That fraction predicts the quality of your execution way, way more accurately than your trading strategy, your fancy indicators, or how many years you've spent staring at screens. It is the absolute, non-negotiable baseline for executing anything that's actually worth calling trading. So I'm going to leave you with this final thought today. Raise the rate. Before the next session opens, ask yourself, are you going to keep showing up, just crossing your fingers and hoping the market magically hands you a win? Or are you going to do the hard work before your morning coffee is even finished? Remember, true execution is just confirming the work you've already done. Start building that prepared mind today. Thanks for hanging out with me on this explainer, and I'll catch you in the next one.